Okay, it says that I'm live. I'm inclined to believe it. Let me know if you can see stuff and hear stuff. You can see we've got the deliberately ominous linear chart of BTC USD, which looks at least 10% scarier than the log chart. I don't think there's any merit to kind of using log or linear, as I've explained several times. For me, it's just a matter of, you can see on log, the range, you need to zoom in a lot further because it just becomes a lot more squished. Whereas if you're on linear, you can kind of zoom out and it looks a bit clearer in terms of structure. So that's kind of the main reason for doing that. But yeah, I hope you all had a wonderful weekend. Not much going on, at least in the Bitcoin world, given we are all playing the S&P 500 simulator until further notice. And legacy markets, I think there's a holiday in the US today, so much, I think, as far as catalysts go, it's going to be a quiet day on that front, and we can see where the market spits us out tomorrow. Market Trader says, please guys like the video. I'm inclined to agree with that. Right, so before the technical stuff, I will just kind of talk about non-technical stuff, as helpful as a distinction as that is. I think in my mind, and I've got no good empirical evidence to quantify this is just one of those eye test sort of things. In my mind, at least, we're gonna at some point break the correlation traders. That is to say, the free money trade, where as soon as the S&P 500 looks somewhat weak and goes down like a fraction of a percent, you just short BTC and it goes down like 50%. I'm obviously exaggerating with the numbers, but I'm starting at least to feel some sort of narrative saturation when it comes to that trade. And I honestly don't think it's going to stick around forever. Now, whether that's just a short-term decoupling, which causes a squeeze, or maybe the equities really do take a break and Bitcoin performs better, whatever the mechanism for that is, this is, again, purely anecdotal gut feeling, just sharing what's going through my head. I really think we will see that that meta, if you will, to use some meta language. I really think we'll see that tested in the near future. I don't think that's going to stick around for sort of weeks and weeks, where equities just keep puking and Bitcoin just keeps puking further, and it's very one-sided and very straightforward in that regard. I don't think it's going to stick around forever. We are trading kind of tick for tick, especially to the downside with the S&P, but I think we're closer to the end of that than the beginning, if that makes sense. And now what might that look like, we've already discussed. You could also just have a world where the S&P just starts to puke a little bit, right? It just starts to trade a bit lower, and then the crypto participants, many of whom are just sort of casual traders catching on now and not just correlation bots, algos, etc. S&P shows a bit of weakness, crypto gets pushed, so S&P goes down a little, crypto gets pushed very hard, and then this thing starts to recover. And then because of the amount of aggressive selling, expecting, one of these types of moves, if you see any type of pressure or relief there, it's, fireworks type of thing, where I really think if the market sells too aggressively into perceived S&P weakness, and that weakness either doesn't materialize or there's a Bitcoin bid at like attractive relative value levels, whatever it may be, I think that's going to put some pressure on the one-to-one tick for tick downside correlation trade. So again, this is just very much off the cuff. Don't have a ton of evidence for this. I'm not going to try to predict what the S&P is going to do, and I think that's been a prevailing theme throughout the last couple of weeks, and understandably why a lot of people are trading altcoins, because if you're trading Bitcoin, I mean, not only is there nothing particularly attractive about this, but also you must ask yourself, given the tick for tick trading with the S&P, what's the likelihood that I've actually got a short-term, mid-term, whatever edge in trading the S&P 500 directionally? And the answer is it's very unlikely, right? It's very unlikely. And hence why I think understandably a lot of interest has been towards altcoins or not trading at all, etc. I get that. Just on my radar for the next, 1 to 3 weeks, however long it may be, I don't think the S&P is going to go down forever. And I can, my gut is happy to entertain a world where that trade is taken for the nth time, S&P looks weak, short BTC, and where it doesn't work out and leads to a squeeze. Now that squeeze doesn't have to be trend reversing. My kind of worst case scenario is actually a pump with those correlation traders getting carried out, which just Hasaka bleeds back down and doesn't do shit. But it's just something I've made a note of in the back of my head, and actually in the server where I pontificate about trades, ideas, etc., is that I don't think that trade is going to stick around forever, and I'm on guard in terms of just sell BTC when S&P goes down. I think we're reaching some form of narrative exhaustion in the near future there. So that's kind of the main thing there. What are possible squeeze targets? I mean, it depends how aggressively it's sold, etc. But I mean, eye test wise, as we talked about last stream, the first trouble area would be 45, which was missed on the recent rally, which is kind of weak. That'll kind of be it. And then if you get a wick into 46, the underside of this structure, that's fine. Just something conservative. I'm not looking for like, the S&P will go down, Bitcoin will diverge, then it goes to like 70k. That's not at all the scope of the idea. I'm just focusing, it's more of a much lower time frame thing that I'm aware of. And again, is there a lot of evidence to suggest that decoupling is taking place? No, not really. It's just something I want to have on my radar, so I kind of know what to do, what to expect if and when it happens. If you have a narrative or a trade that's working for a long time, it always makes sense to have contingency plans for when that correlation breaks and stops working, etc. Those aren't the type of edgers, especially low time frame ones, that stick around forever, and you don't want to get blown out when it does break, because the breaks tend to be violent. Squeeze for ants, yeah, something like that. And it depends where it happens. Obviously, maybe it's less of a squeeze for ants if it happens at lower prices and there's a bit more upside to capture. But in any case. Okay, so that's the non-technical stuff. Is there anything else I wanted to mention? I don't think so. The only other thing I'll add is, today's weakness is somewhat annoying / somewhat telling, because if the argument is that the downside is just currently being led by this correlation, and then you have a day which is a kind of holiday in the US, and Bitcoin kind of bleeds down without much volatility, in the S&P, this is just suggestive. Again, it's not a big deal. I mean, look at this. There's really not a lot going on. But, you could make a loose argument that this is not just correlation weakness, but now you're getting evidence of secular weakness as well, i.e. BTC going down in a way that's not purely driven by S&P correlation traders. But, that's just like something in the back of my mind again, not like a huge deal. So let's do technical stuff. Not a lot has changed. I will say, in accordance with the title where it says Bitcoin market structure broken, at this point on the weekly time frame, it's largely unambiguous. And if anything, the title's somewhat dated, because this week is likely to be, or if you're very aggressive, has already been the market structure retest week after it was broken, right? So if we go from low to high, higher low, higher high, and then this move was the potential higher low setup before offering a higher high, and you can see trend was broken when the market violated the previous swing low or key swing low. And again, we aren't just picking out like random wicks and saying it's a higher low. Your basic market structure eye test can kind of see that this is important, right? Because that's also the low which preceded the higher high, etc. Like it just stands out. So from a market structure point of view, if we take that, right, low, high, higher low, higher high, market dipping, you've got a chance for a higher low to play a bounce, and the best it could give was just a bounce to weekly resistance. And we actually talked about this level at great length, so we know where it comes from. And now it looks like, if we take the most recent evidence of the last couple of weekly closes, the area where the last significant higher low formed, or at least our reference point, which is this one, it's broken on a weekly time frame. Now again, some people take objection with using candle closes instead of wicks, yada yada. I've generally had more success with candle closes. That's how I delineate market structure. If you were to look at a line chart, you would get something similar, right, with a lower low in that regard, and the same area being retested as resistance. But in any case, it's different strokes for different folks, I suppose. I'm comfortable using candle bodies to delineate weekly market structure. So basic eye test, right, when it comes to market structure, weekly levels, etc., is you've got a weekly lower low, and you can simply map out, I think you can take a liberty and just map out this entire consolidation as your market structure level. So again, when you do get a break in market structure, the assumption is that, market structure is broken, so it's going to go straight down, right? And that's not always the case. Just like when you have an upside break, right? When you break market structure to the upside, that doesn't mean it just teleports to whatever target you've got immediately. Sometimes you get some portion of an impulsive leg, but ultimately it takes a higher low before you get the trending move and quote-unquote confirmation that market structure is going to lead to, like the break in market structure is going to lead to continuation. In the same vein, just because you have weekly market structure broken here doesn't mean that it can't bounce to whatever market structure level we've got delineated, which is 46, 48-ish, and we can discuss where exactly the line in the sand is, and if there is one. The benefit then, that might sound unreasonable, which is, well, you said that what's the point of paying attention to market structure breaks if it's not going to be straight down, that can actually bounce before offering continuation? And the point of having that is that it gives you directional bias, right? Which is to say that given that high time frame market structure appears to be broken, if you start getting a rip higher this week, you kind of know what to do with it, or at least know how to tailor your expectations that, okay, yes, the market is pumping, but the higher time frames are still showing evidence of weakness. So until proven otherwise, I'm going to assume that it's more likely to be a lower high, and therefore I'll play more defensively and, rebalance or do whatever it is that you have to do, right? So that's really the benefit of having a directional bias. It's not to tell you immediately whether the market's going to go up or down as soon as the break in market structure has taken place, but rather the benefit is to give you a higher probability expectation for how to trade following the break, even if it goes up after a downside break, and even if it goes down after a upside break. Did I say that correctly? Even if it goes up after a downside break, even if it goes down after an upside break. Yes, that's correct. So yeah, that's kind of weekly BTC. I still think if we even zoom out a little bit, no Bitcoin bottoms are immediate or happen in the space of like 1 week or anything else. If we still pay attention to this 38 to 32K cluster, which is and this bit's important, it's still an untested level of support ever since we formed the last bottom there. So I think still probabilistically for this year, as we spoke to, RV on our podcast, and, if you believe in some sort of non-trending environment for at least some portion of this year, I'm really hard pressed to argue that you're going to get a bottom in the 40s, and then from then on it's just chop before eventually resolving higher. I'm hard pressed to argue for an environment where you have weeks to months of ranging and zero test of the high time frame range low. I don't know. I find that a pretty difficult premise to entertain, but that doesn't mean trading towards it is going to be easy, where you just kind of sell, wait, then you buy the bottom and do all this kind of stuff, right? So in the back of my head, what's going on, right? Number one, I still think during the course of this year, at the very least, and I know that's not a very helpful time frame to have in January, but it's not like we're super far off anyway, that 32 to 38 cluster will trade. And again, it doesn't have to be perfect. Just like we had an upside deviation here, we could get a downside deviation here, and I think that'd be a very good entry for a ranging trade. So that's, it doesn't necessarily mean you buy 38 and the second it goes to 37,999, you're stopped out and you quit crypto and go back to your job, right? That's not the assumption there. But assumption number one, or, the mental framework I've got, is it's still quite likely, if I had to pull numbers out of my ass, 60% chance-ish, 60 to 70% chance that this support is traded to during the course of this year. And the second point I've got is that weekly market structure is broken, right? Weekly market structure is broken, which sets, in my mind, the expectation of likely getting some sort of lower high. And then we ask ourselves, what type of area is ripe for that lower high to form, which is where we're looking for resistance. And again, this kind of cluster is messy, but I think generally speaking, you know, we can give ourselves the liberty of taking the previous weekly level we had, which is also the weekly mid-range, etc. We know it falls around, you know, mid and maybe at a stretch high 40s, right? Which is mid to high 40s. So that's, you know, that's kind of the mental framework I've got going into this week, where in the back of my mind, with a longer time horizon focus, I still think if this year is going to suck for some portion of it, 32 to 38 is likely to be traded, and I've got the mental bandwidth to entertain the idea of some sort of deviation, spike of the lows, and just like this was a spectacular pattern failure, which led to a big move, we could get a spectacular pattern failure to the downside, which leads to a big move as well. You know, I'm happy with those consequences and have a reasonable, you know, I'm not going to be caught with my pants down if that takes place. As for shorter term stuff, as we discussed, the market really was served up on a platter. The opportunity to offer a really nice bounce at, you know, this market structure level here to make a higher low, but it didn't take that opportunity, right? Now, of course, there is a world in which case this is the breakdown, this bit bottoms here, and then you get something like this. That's fine, but it needs to prove that to me, right? Until proven otherwise, I'm going to assume that the market failed to bounce at the midpoint of the high time frame range. Market structure is now broken, and so that confluence of stuff in the mid to high 40s, I should treat it as resistance until proven otherwise. If it does prove otherwise, you know, we get the weekly close above and this looks like some fantastic failed breakdown, etc. We can then have a conversation of trading once again from the major range midpoint back towards the range high. That would be a totally different live stream. And what I would argue there is say, look, last week when we spoke, market structure was broken and 46 to 48 was resistance. Since then, we had a really strong reclaim, and, you know, we've pulled back a little now, and I think this was a likely short-term bottom, and the next magnet is the high time frame range high. That's fine. You know, sometimes you get breakdowns which don't stick. That's bullish. Sometimes you get breakouts which don't stick, and that's bearish. If I get new evidence at this market structure level, this mid to high 40s, you know, we can. There's definitely a rotation to be caught there on mid to higher time frames. But for the time being, given that market structure is broken, if we get a rally into next week, I expect that to be a rally into resistance, you know, into the area also that we defined as the weekly mid-range, and all our moving average memes are here as well, and that's kind of something to fade until proven otherwise, basically. And the downside target for that type of fade, or just the area of interest to rebuy or rebalance, whatever fancy words you want to use in terms of areas to be more bullish than bearish, just like this would be more bearish than bullish, is unsurprisingly the weekly range low. Okay, does that make any sense as a framework? Also, did anyone watch the RV podcast? Did you enjoy it? It was weird being behind the mic again. We're a bit rusty, Don and I, but it's always fun to talk to smart people, you know? Also, leave a like on the video if you like the video, I suppose. He sounds like a gigabrain. He is a gigabrain. He is a gigabrain. So yeah, is there anything interesting on lower time frames? I mean, I'm not too enthused by this, right? Like, I'm looking at this and I'm not sure what type of conclusions I'm supposed to arrive at. Like, am I supposed to be inspired? There really isn't like a lot going on. If anything, you know, we've had the fabled 40% pullback on BTC into a really important 40k level. I think I want to see a bit more than, you know, the response we've had so far. And I can understand why there's a reduced appetite at these levels, given how forceful the correlation has been. I still think, at least in terms of technicals, like right here at low 40s is an odd place to sell, because you're much closer to interim support, right? You are closer to support than you are to resistance, right? Or, you know, it's likely that if you do get a pump, trading into the consolidation or a wick through here is more probability, but is higher probability. But like at this point, honestly, it's a coin toss. The areas where this isn't the type of area where I like to make high conviction bets. We know that area is 32 to 38 because it's weekly structure that's been untested for fucking eons, or it's some sort of fantastic mid-range reclaim at the mid 40s. Right here, it seems like the trade to be had has, at least in the short term, played out, which is the 40k bounce trade from 40 to 44, 40 to 45, whatever. Check. That trade seems to have been done, and now if you're late to that, you're sitting in chop and there's really not much going on. So I'm not going to, I'm not engagement farming here or trying to force ideas for content and saying that every level is important. I think at this juncture, at least for me, the high conviction or technically significant trade has played out, which is the retest of this daily level once again, and the almost mechanical bounce that it offered. It's just far less clear to me here, and I think the clearer scenarios are either if it rips up this week to retest weekly market structure levels as resistance, or if we get another puke, at which point the value punt and the proximity to invalidation become much more attractive and worth trading as well. This low 40s kind of bleed after 40% bounce, I think, the easy trade is played out, and you're probably a bit late to do anything with conviction, So I guess for BTC, weekly MS broken. If rally res at, what are we talking? 48? It's a bit of a... We can just take some liberties and say 46 to 48, right? The weekly close will tell you anyway if the level's been reclaimed or if it's still resistance. So even lower time frames than that. If rally res at 46, 48k. Continuation target 32, 38. Cluster currently low 40s meh, because a 40.6k clear bounce trade mostly played out, and B, clear better high time frame structures a bit above or a bit below, i.e. in any case trading here equals likely getting stopped in the areas you should be looking to trade in the first place. Let's see if this makes any sense. So Bitcoin, weekly market structure broken. This is the discussion we had contingent on the lower low on the weekly time frame, and that market structure level emerges at your mid to high 40s. Accordingly, if we get a rally, which isn't uncommon after a market structure break, right? If you get a rally, you've got resistance at 46 to 48, which is that same market structure level. You've got all your moving average memes there. That's the weekly mid-range. There's like a lot going on here, right? So that's not an area I want to be long into as soon as it tests it from the underside, right? If you get continuation in sort of the larger trend, or given the weekly break in market structure, 32 to 38 is still high time frame structure, which is untested. I think if 40 breaks, that's likely to be a bit pukey. So it might have to wick a fair bit below this to find some interest, or if it's like a liquidation driven move. But in any case, if we're looking at weekly closes, weekly structure on a weekly stream, etc., that's still, structurally the next area. In terms of where the market is right now, I defined it as meh, and there are two, I think, decent reasons for that. Is that the 40.6k daily level, I think you're a bit late to that trade, or at least it's far less attractive here than it was at the level itself. So that's the first argument. And I guess the second argument is a logical corollary of the first, which is that you've got really good structure just a bit above you, which is the kind of 46, 48 type of retest level, or it's slightly below us in the untested weekly range. So you're kind of, it'll be the equivalent of, if you've got like, this is an A+ level here, and this is an A+ level here, and the market is here, it's a version of diddling in the middle, right? If you're going to trade, punt here or punt here. This isn't worth it, or at least to me, right? And that's kind of the image I have, or the premise I'm trying to present with the last point, which is that the better high time frame structures are a bit above. That is to say, again, that mid-range where the moving average memes are, market structure level, yada yada, 46, 48, or a bit below, which is the untested cluster. Basically this stuff. And where it is right now is, as they say in Russian, "Ni v pizdu, ni v krasnu armiu," which is, I'm not going to translate that because it's vulgar, but it's neither here nor there. Just, I'm sure there's some native Russian speakers in the chat who'll get that. In any case, yeah, trading here equals likely getting stopped in the areas you should be looking to trade in the first place. So for your high time frame sort of Bitcoin swing trade punters, if any of you still exist, I know it's a dying breed given how dispersed the altcoin market has been. I still think the 40.6k trade is far less clear than it was, and the next clearer areas will be a bit above or a bit below. Does that make sense? The literal translation is neither in the vagina nor in the Red Army. That's the literal translation, but obviously the idiomatic translation is neither here nor there. Okay. Let's look at ETH. So, as we mentioned, when something breaks market structure, that doesn't necessarily mean it has to go down immediately, right? If anything, you often get a bounce, and the break in market structure just kind of sets an expectation for what do you do with that bounce. Is that a bounce you want to buy? Is that a bounce you want to sell? Do nothing, etc., etc. So, also, thanks for 100 likes. You guys are cool. When we last spoke about ETH, the level I had delineated was this pre-all-time high cluster here. And that kind of, this doesn't look too bad in terms of the most recent weekly close. I mean, arguably it's a bit borderline, and obviously if Bitcoin pukes, this will shit as well. But if you came to me and said, does this look like the market is closer, is it at support? The eye test kind of says yes, right? Or at least it's at the bottom of some sort of range. Even if you take a conservative view of levels, you say, what the fuck is this box cred? This is dog shit. Show me a proper level. And we go back to basics and literally just do this. That kind of looks like the market held its market structure level. Now, obviously, the issue is ETH has basically been playing out like Bitcoin is, except it's doing it slower, right? That's kind of what muddies this argument a little bit. So if you look at Bitcoin, on the weekly, right? In the same vein, you had the market come in to its market structure level. It looked like it was going to bounce and form a higher low, where a higher low should be, reasonably expected, and then it puked through, and that's now resistance. So while for me, this weekly close on ETH is actually decent, I'm cognizant of the fact that it's been sort of playing out as a slower version of BTC, right? Where BTC had failed breakdown, number go down, higher low attempt, fail. ETH also has failed breakdown, number go down, and arguably, or you could make the case that it's just at this attempted higher low portion. And if Bitcoin's going to follow through, then this is going to follow through as well towards, mid 2K would be the target there. So that makes me slightly uncomfortable. But in any case, in terms of structure, this is still above support, so I don't have a clear short setup on this or anything of that sort. This appears to be holding. So if you're playing bounces this week, I think that's reasonable. With the caveat that there's kind of an increased risk to the setup, or I should say a reduced probability, because it's kind of just been mirroring what Bitcoin's doing, just on a slower time frame. I don't really think there's a ton else I want to mention for ETH. Where am I? Like, my eye test wants to just say bounce, which is, you know, you find some interim support at the market structure level. Bitcoin creeps back towards 46 to 48, and ETH creeps back towards, pushes into this cluster once again, which is what, 34 to 35. But even at the time of recording this, right, the market's down after holding weekly support. That's what, like a 5-10% move? I mean, maybe decent enough, but guys, just, you know, I'm very frank on these things. I don't have the conviction to or a clear setup to punt this at where it is right now. It passes the eye test, as in, you know, weekly bounces at market structure level and trades to daily resistance. Like, it's not asking for a lot to say that when you get a bounce, even a weak bounce from weekly level should be able to take you to the daily. But just like the Bitcoin trade, the obvious portion, the quote-unquote obvious or clear trade from 40.6 to 45 has already taken place, and now it's less clear. I feel like I could make a very similar case for ETH, where you had the weekly bounce, and it has reached daily support, and so the clearer trade was on the first time round, right? First test, best test. So if you're then punting this a second time, by definition, there's a reduced probability of the same thing working. It's just a bit murky. And these aren't the type of market conditions where I'm going to be willing to stick my neck out for murky setups, you know? I know it feels like a cop-out, but sometimes what you have to do is look at the type of regime the market is in. Is there just like an infinite turbo bid on everything that's going to bail me out? Or is it sort of cerebral PvP, you better be getting amazing entries or you're going to get rolled over and bled into, etc.? In my mind, the current environment is more the latter, where there's a lot of chop, a lot of bleeding, very PvP-esque. Market is spooked, paying attention to the correlation to the S&P more than anything, etc. So in those tougher conditions, I don't agree necessarily with the quite popular at this stage premise where, oh, you just wait until the market is completely on easy mode, you do all your trading then, and then as soon as it stops being easy, you don't do anything. I don't even think that's a sustainable model for a lot of people. I mean, you need to be in quite a privileged position to some extent to be able to be out of the market for ages and ages. So I don't think that's applicable to most people necessarily. But in any case, I don't think it should be, you don't have to resign yourself and say, well, unless everything is going up only for 10 weeks in a row, I'm not going to trade it. I don't think that helps. I think a better way of looking at it is when the market has this tailwind, I'm going to be more liberal with setups, and maybe I don't need all the confluence in the world to punt and give myself more margin of error, etc., etc., because, you know, there's like this turbo bid soaking everything up and maybe even bailing you out of not the best entries, just because everything is increasing in market cap and inflows are just so much greater than outflows. However, the opposite of that is also true. That if the market is tougher to trade and conditions are more cerebral, rotations are shorter, it feels heavy, that doesn't mean you don't trade it. You just be stricter with yourself and say, I'm still happy to trade this, but it really needs to be attractive. So I guess the TLDR version of what I'm saying, when market strong, less greedy perfect entries, because turbo juiced bid bails out anyway. When market weak, more greedy precise entries, because probability of smaller rotations, bleeds, etc. higher. Good conditions equals more punts with greater room for error. Not so good conditions equals fewer punts with less room for error. Does this make sense conceptually? Just have a read and let me know. I'm going to sip this spring water. No, sparkling water. No, Don's been arguing for 30 to 60 for absolutely eons. It's not the case that... yeah, but I was kind of pulling his leg there. Everything you say makes sense, Cred? That's really not the case. So yeah, when it comes to choppy conditions or conditions that are less favorable, it's just a matter of pickiness, you know? I think if I'm being picky, the clear trade played out, and this is far less clear. And because we're more likely in this than this, I'm going to be focusing on fewer punts with less room for error, and I'm not sticking my neck out for marginal bets. Did you catch up to One Piece? Yes. Yes, I did. And I'm going to reread it. But yes, I'm caught up. And I got Trader Main to start reading it as well. Don't post any spoilers. I will find you, ban you, etc. In Minecraft, obviously. In terms of alts, you know, the second part of the title says altcoin retests, and there's a lot of stuff being retested. We spoke about Sol at this weekly, within this weekly consolidation here, I think. I think this is what we had. So again, this isn't the type of environment where you're getting massive rotations, right? I mean, this is a perfect example where stuff that broke market structure and is sort of down-trendy-ish. And if you're trading really well, there's still stuff to capture. Like clear range low bounce into very clear range midpoint bounce. But that's all you're getting. That's all you're getting. Because you see, if you hold on to that trade, you've already been full retraced. GG, buddy, have fun. It's not the environment where you're rewarded for trending setups. I think until proven otherwise, range-bound setups are going to continue to outperform, right? And this is a perfect example. Buy the range low, sell the range midpoint, you know, hit and run type of setup more than anything. And in a similar vein, again, just like we talked about with ETH, if you took this trade the first time, legend, you probably feel really good about it. For what it's worth, I'm going to throw Don under the bus. I tried to shill this in Technical Roundup to play it from, because I saw it like down here basically, and he didn't like it because the move wasn't big enough. But I shilled it there in spirit. There you go. Didn't know what that's worth. Fucking absolutely nothing. You can't take that to the bank, can you? In any case, it's a good showcase of the type of setups you get. But like, the question is, would you take this a second time? You know, it's far less clear than the first time. Maybe if you get like a push below the swing low and then it comes back up, that becomes a new setup. But it's, you know, you need more to warrant rebuying the same level after it's already reached its target, right? So that's that. I think I saw a Pintoshi tweet about Solana. Here we go. The engagement on this is mad. I'm not, you know, you can make a weird case that, oh, so many people liked it, it's never going to get there. I don't think that's useful reasoning at all. But I agree with him structurally. If this high time frame breakdown continues to happen, you sometimes have to just look at, I mean, this thing went up 15,000% in like a year, maybe more than that. So I know there's a lot of outrage at him looking at these much lower levels, but if we're talking about percentage retraces and all this other stuff, it's not the most absurd thing I've seen by any means. Yeah. Also, is there any appetite, just like when we're done with the stream and looking at levels and charts, should I just scroll through Twitter and we can just see what my newsfeed looks like, maybe react to some stuff and see what's going on? Is that at all interesting, or is that like a low integrity engagement bait, Cred reacts to Twitter type of Zoomer algo bullshit? But I think it'd be fun, you know, it's something different. Okay, we'll do that. Cool. So yeah, on the Sol front, I think the easy portion of the trade is played out, where you buy the range low, sell the range midpoint. Maybe it comes down into the range low and does something cool again and spends some time and reaccumulates, yada yada, and then, you know, gets really bought up at this level. And you can make a case for maybe not just the range midpoint, but actually the range high. But I honestly think, as depressing as that may sound, the best case scenario for Sol is continuing to trade within 130 to 170, 180. Just like for BTC, it would be within, between 30K and 60K, because the alternative is a significantly steeper move lower. And I agree with some of those Pentoshi levels. I think the first trouble area, at least in terms of technicals, I think psychologically you probably see a bit of a bid at 100, because that seems cheap relative to 300 or whatever, 270, where that top came in. But in terms of technical structure, it starts for me all the way down at 70 to 80. I think Pento had something similar. So best case, this ranges, gets reaccumulated, etc. On the weekly time frame, maybe it will be enough to get a failed breakdown, which gets bought up and then back into the range, and then you punt that. All of that is fine. But yeah, I think you can literally go to the weekly time frame, highest close, lowest close, range midpoint, and you'll have most of what matters for Sol to trade there. I just think in the short term, the range low to range midpoint trade has played out. Unless I see something really cool here, I'm not a fan of rebuying it, especially given some altcoins are testing much better levels than this one, and the hit and run setup has played out already. Again, I think on stream we spoke about this weekly cluster, and I think Trader Main had it as well. And obviously all of his YouTube viewers are mega rich whales, which buy all of his boxes with massive leverage. So that's why the market bounced there. That's a very important market microstructure level. Like in a similar vein, I know I'm going to sound like a broken record, but it's pretty much a theme. I think we even talked about this level here in terms of potential ups. I think we talked about this, and then these were the levels. Again, not to sound like a broken record, but the clear trade has played out. That is to say, weekly support all the way up into daily resistance and a decent type of lower high area. The decent trade's already played out. Just like Sol, just like ETH, maybe if it comes back to the weekly and you see something you like, that becomes puntable once again, but not here. I don't see a ton at 78, just under 80 that I like. Now bear in mind, I'm not saying that when you're trading weekly timeframes, you've only got one shot, Eminem style, you've got to make it count or whatever, and then if you miss it, you're fucked and you can never trade it again. What you will very often get, especially if you consider trading the same level with different time frames or holding periods for that trade. Let's say this is a weekly level and your time frame is the 4 hour, 1 hour, just some sort of low time frame stuff. Now what you'll see, and this is how I trade a lot of this stuff, when it comes into the level, if it's fresh, I'm going to look to punt it. Now that doesn't mean necessarily on the nose at all times. Sometimes I'll be a bit greedy and I'm expecting a wick to set limit orders, whatever. But in any case, the first test, best test trade is when you trade the first test of the level itself and you play the immediate bounce into So in this case, this is a weekly level. And so if I'm playing the bounce, I'm going to trade it into a level that is of a lower time frame than where it comes from. So if it's a weekly level and I'm playing the first bounce, I'm going to sell it into daily resistance, right? Or even 4 hour resistance, depending on like what the market looks like, etc. So the first kind of bounce or the first scalp trade, if you will, at a high time frame level generally has a shorter holding period because you're literally just playing the first rotation that it offers, and B, your target won't be the next equivalent level, that is to say on the next time frame, but rather something of a lower time frame which is a bit less ambitious as a target, right? And then what you'll often get, and that's the short-term trade that you get from it, right? Short-term trade equals high time frame level immediately into nearby low time frame level, right? So in this case, this is a weekly, we punt it, and then we close it at whatever, daily, 4 hour, doesn't matter, okay? That's the short-term trade. Now, in the same vein, what you'll often get, because it's a weekly level, it's totally reasonable for the market to spend a couple of weeks there, right? Doesn't mean it's going to die. Like, if you saw an hourly level, and the market came in there and spent like a couple of hours and then bounced, that's completely fine. Whereas for some reason, if it's a weekly level and the market comes in and spends a couple of weeks there, because we all have ape brains or orangutan brains or whatever, we feel like this is inappropriate, and that, you know, because of this really short time frame focus, we set unreasonable expectations on how long prices allowed to spend at higher time frame levels. So the short-term trade, as we discussed, is just this punt into something lower time frame, but then often the same level is still tradable, just then on the original time frame. So what you'll get is you'll get the mechanical bounce into, let's say, 4-hour or daily, right? And so that's a good short-term trade from A to B. And then it will come back to the weekly level, you know, come back, and then spend some time sort of reaccumulating there for 1 or 2 weeks before then giving you the larger move. So you can see when you're trading higher time frame structures, you sort of get 2 trades that come out of it. Or you can, depending on what it looks like and what your trading system looks like, and, you know, yada yada, a bunch of other stuff. One is the short-term trade to a lower time frame level, and one is a mid-term or I guess long-term trade into your higher time frame level. So this is people scalping high time frame levels for the reaction. This is the swing trading / position trading at higher time frame levels for a bigger rotation. This trade takes less time, but you're also trading a smaller move. This trade takes more time and you're targeting a bigger move. Does that make any fucking sense whatsoever? Do you think it's probable for Sol to overthrow the lower range band too? Yeah, I think it's possible. I don't know. I think it's like 50% off the top of my head. Okay. I still want AVAX to come home. For me, AVAX coming home is actually this weekly consolidation to some extent, between 55-ish and 70. I don't know. I'm sure there's still some traction in this ecosystem. My concern is kind of what Avi brought up, where by the time a lot of these trades, if they reach these high time frame value areas, the relative appeal of that narrative and the bid supporting it is quite dry or reduced compared to where it was, right? So, you know, L1 dip buyers were very much rewarded for punting lower time frame structures on these bounces. But, you know, you definitely have had, since the parabola break, mostly lower highs, and it hasn't come home for me yet. I mean, you can just eye test and see that it's at, you know, near some sort of range low. So if you want to scalp this or trade it short time frame, fine. But as I've covered before, if I ever trade ahead of my high time frame levels and front run them, if you will, without being patient, I get burned. So I think there are very reasonable bounces to be had from nearby bottom of the range, but it's not for me personally. If we look at the stuff that's hot, and again, finally getting towards the title, altcoin retests. Also, if you wanted to see the Twitter reaction stuff, let's get to like 200 likes or something. And also, if you're watching the replay, leave a comment if you thought it was cringe, Zoomer content, or based, as the kids say. Don't use any of those words, please. As far as altcoin retests go, you've got to look at strong stuff. You can see that my watch list is red. What is green? Tron and Cardano. Oh, for fuck's sake. This is so bearish, honestly. How is this allowed? On a day where the entire market is red, the strongest performers are Tron, Litecoin, and completely outlier Cardano. Fuck off, man. I'm just going to close this. Whatever, man. Get out of my face. Get out of my face. So yeah, on the retest side of things, I think you've got a rather straightforward one when it comes to Phantom, which is that if this breakout candle, which is quite impressive, is generous, fuck me, it's not Santa Claus, is it? If this breakout is genuine, then you don't expect it to either pull back a ton, or at the at the extreme, it shouldn't be failing the breakout level. I think you can take the liberty, especially if you've already got a position, of delineating the highest close, breakout point, whatever you want to call it, and that gives you a pretty clear invalidation, right? Because if it loses or closes below, etc., its breakout point, then you've got what looks like a failed breakout setup, and your target for that is unclear. Like, at the very least, it looks like it's going to retest this consolidation, but then think about what the market looks like if that's the weekly candle, right? The market would look like this if it doesn't find support at the level we delineated, just kind of in terms of eyeballing it. Like, that's kind of what it would likely start to look like. Goodness me. Here we go, we're doing shading. This is what I went to law school for, right? Here we go. So then the question becomes, if the market looks like this, how much confidence is there going to be in this asset? And at least for traders, it's going to look like shit. Which is why when you get breakouts, the best breakouts don't look back. Acceptable breakouts look back very quickly and get immediately springboard up. And those which hang around, fester, and loiter at the breakout level typically aren't the best. So I think you've got like a decent structure to use for invalidation, and if this massive engulfing candle starts getting retraced and support isn't doing its job, I think you'll get to buy this a fair bit lower. At least my eye test says this is the first trouble area, and then likely range low if this doesn't hold. So that's something to look for if this push continues. On the near side of things, don't have to look too far. Haha. Similar thing, right? You've got the pre-breakout consolidation. We know that if this engulfing bar starts to really get retraced and support doesn't hold, it'll look like utter dog shit. Which, I mean, look how nice this cluster is on the daily time frame, right? And again, it doesn't have to be the full box. You can break it down into range high, range low, whatever. But, you know, most people are trading these on higher time frames, given how they've been trending. This is the classic pattern: impulse, consolidate, impulse. If it comes down and the market is strong, the consolidation should hold as support before moving higher. So in a similar vein, it gives you the same setup / invalidation. In terms of at the range high, that's your first area for a bounce to play the short-term stuff if it sets up. In terms of at the range low, ideally you want to see, I mean, the setup becomes much clearer if you get like a stab through this double bottom, some sort of failed breakdown attempt. That's a bit extreme. That's still a bit extreme. Some sort of failed breakdown attempt which trades back into the range. That'll give you an invalidation. Target 1, range high. You know, target 2, whatever, where it came from. That would make sense. It would probably have to be something like this to get me on board, given how shit I am at trading altcoins. But if we're looking at, you know, this is a once-a-week stream, so I can't really get into, like, super low time frame stuff. It doesn't matter. It gets old very quickly. But in terms of structural features, I think it's quite clear. You've got impulse, range, impulse. If this isn't support between what is that? 13.5 and 16. If that's not your support, then you're probably in for a bigger retrace. So pretty clear structure to watch for this week, I think. And one kind of looks like Phantom in that regard, where you had like a massive weekly breakout, and you really need the weekly breakout to stick, right? However you want to delineate it, because if it doesn't stick, it looks like total shit. So you can see a common theme. What does Atom look like? I mean, Atom just, I think, yeah, relatively not as clear in terms of technicals, because those made a higher high and we're looking for support. This sort of looks like a lower high, and I'd say support is between 32 and 37, just purely technically. But the prevailing theme across the really strong altcoins, I'm not talking about fucking Cardano, excuse me, the prevailing theme across the new Hisaka basket is the TLDR, Zoomer summary version, is that stuff broke out, and stuff, while the market is red, is approaching breakout retest levels. If you're going to get another leg up, those breakout retest levels should hold. And the good thing about those trades is those retest levels should hold quickly, because good breakouts don't spend too long at those retest levels. So that's really the TLDR on alts, at least the good ones. And, being completely honest, as always, I'm probably just going to be boomer watching BTC while the Zoomers of the world run circles around me trading this alt basket. But again, that's mostly down to environmental factors. Does that make sense in terms of, hey, the market broke out, you've got very clear technical structures, it's a bit of a home run in terms of TA stuff, and if the market doesn't take the home run in terms of where to bounce, then that's a signal in itself. Remember, good bullish setups failing is bearish, good bearish setups failing is bullish. You feel me? Any questions about any of that? I mean, look, at least I've got these on my watch list. With Donald, you'd be like, okay, let's look at ICX, Komodo, Bitcoin Cash, Blackcoin, Ravencoin. I don't know. I love trolling his watch list. I don't think I'll ever get over it. Ever. It'll never stop being funny. I'll make that joke until I die, for real. You don't know what Komodo is? Come on. KMD. Is that still a coin? KMD. Yeah, of course it is. Oh, there you go. This is a real Donald gem. I think my dinosaur coins is like the most recent version of his watch list. He doesn't know half of these. He's like, wow, I haven't read the tech. This is so new. I don't do halving, fractal, comparison, analogies, markets. It's just really not my thing. Oh yeah, versus BTC as well. God. Can you explain ohm and bonding, please? No. Okay, let's take a look at what Twitter's saying. Let's take a look. Zoom in. Here we go, the fun bit. I'm not going to go through every single tweet, obviously, just the stuff that's interesting. This I love, because it's literally what we spoke about. It's over, isn't it, from good old Adam. He's lovely. He's got a beautiful blog, and he's a beautiful person. Percentage market cap gainers. Number 1 is Cardano. Number 2 is SafeMoon. Now, for those unaware of the memes, the general premise that a lot of people look at is, where is their strength in the market during times of weakness? And ideally, you want to see that that strength in, you know, good names, high quality projects, maybe even in Bitcoin, ETH, etc. And so when the dinosaur coins start pumping, think of it as a terms of kind of a risk spread, right? Like you've got like Cardano outperforming either the FOAN trade or the Sol Luna AVAX or BTC, etc. Just shows you that the market is gambling with complete garbage on these bounces, and the bid isn't kind of where it quote unquote should be. And just historically, when the dinosaur coins and low quality coins, and for some time it was DeFi, when the market is showing strength in kind of inherently weak sectors, that's seen as a market-wide sign of weakness. So that's some stuff there. Jeebus about Ohm. Mooney, okay. Oh, Mechanism launched a 100 million play-to-earn gaming fund. I still need to be, as the kids say, red-pilled on play-to-earn. I really think the way the whole blockchain gaming stuff takes heed is if you get some of those AAA titles who recognize the potential value of having an in-game economy and letting people transfer their items from one franchise or iteration of the game to the next. I really think it'll just take some creative leadership at existing gaming incumbents for play to earn to become a real thing. And Yotsu says Ubisoft did that, but they have a bad rep already. Yeah, I think it's just going to take a while also because of how much gamers and normies absolutely loathe anything to do with NFTs. And that's understandable given their gaming experience over the last like 5-10 years, or probably 5 years is closer, has been ruined by like extreme financialization of everything, the whole loot box culture and all this other shit. So I'm somewhat sympathetic to gamers as soon as they see kind of some sort of financial angle taking heed in their game to react negatively to that. Like, I get that. But at the moment, most of crypto play to earn stuff is literally yield farming just with extra steps. And most of the time, the games themselves are fucking awful and they're not actually games. These are just financial instruments wrapped as terrible games, and then you're hoping to basically catch another Axie. I know that's cynical, but that's honestly my view. You do get some interesting exceptions like DeFi Kingdoms, where players are willing to do the thing that's not financially plus EV in order to get certain in-game benefits. But the common theme there is the gaming experience itself needs to be good enough to warrant people punting. And 99.9% of these crypto games are just fucking awful. So I don't think you can just have a play-to-earn, gamer market, etc. if the fundamental base experience is shit. And relying on edge cases and developing economies to bolster the whole thing, while Western VCs fucking dump on their heads, I'm not sure I love that. And I don't hold any Jewel or DeFi Kingdom stuff, but yeah, I agree. It's farming with different UX/UI. 100%. That's what Kyle Samani said. Kyle Samani himself was like, a lot of these pay-to-earn games is just yield farming with extra steps. I mean, come on. I think it's a fascinating sector. I'm just not sure how far it can go if at the core of it, the games themselves suck and are unplayable. Or too focused on the financial side of it anyway. Okay, what else we got? More Ohm stuff. Sharing alpha becomes progressively less worth it the larger one's account gets, and shitposting progressively more. I guess that's true. It's probably smart not to comment. I'm just going to chuckle. Here we go. Let's do this. There we go. No more. Romano's experiment about handwriting. This is really cool. But not a lot to say there. Some CSGO content. More on Ohm. Rebasing token, etc. Yeah, okay. More stuff on Ohm. Nuclear. I love nuclear power. I'm bullish nuclear. This looks like what? Is this Simpy stuff? Oh, fuck's sake! That took me a moment, mate. I thought that was his leg. It's not his leg, is it? Right. So this gentleman has clearly sent a picture of his phallus to this alleged woman. Right? We don't know. There are no girls on the internet. Remember, that's a joke. Rating 3 out of 10. So he hasn't done terribly well there. Let's look at the reasoning. Pros: your length looks decent. Okay, good for him. Especially if she, if she's covered all the way up here, maybe she's being generous at the shading, but if this is really the pinnacle of what we're dealing with, then I guess I have to agree with these comments, right? Cons: the tip of, you know what? Why am I doing this? Let's not. Let's go somewhere else. This is just so unreasonable. So unreasonable. What else we got? More penis stuff. I mean, this is what Twitter is, right? You've got penis stuff, anime, 2D girls, and Ohm. Not going to touch the politics. This is great. KSI posting like his Binance leaderboard stuff. You can see he's down 5 mil over the last year in a market that's not down that much. I mean, yeah, look, I've seen stories of this, and not stories, like it's happened in real life, where I've had a friend come up and show me his Binance thing, and he's like, oh, look at me, I hold this coin, that coin, and this coin went up this much, etc. But then I looked at the yearly P&L, and it's down whatever percentage or USD amount, and that's when the market was up only. This was like months ago, or whatever. So this is way more common than you think. Like, it's easy to think that the market's going up and everyone's just making money because the market is going up, but you'd be surprised. And some people are just so bad at, I'm not saying KSI is, I think he does some you know, he's definitely hit some home runs. And look, his net worth is much more than that, and definitely much more than crypto. But some people even mess up uptrends where they'll rotate at the worst possible time. They'll like sell the bottom trying to rotate into something that gets fucking delisted or it's a scam, etc. You know, active trading in a strong trend is actually a very tall order. So yeah, I mean, this is funny, obviously. What else we got? I mean, my feed is... Who said that? Let me see. Walt Winters, cred, holy smokes, your timeline is a landfill. It's fucking awful, isn't it? It's really, really bad. This is more Gainsey posting about normies and... I mean, this meme is... I really like it, to be honest. What else we got? Do we have anything interesting? Mike Tyson shilling NFTs. I mean, this is mad. Also, the only thing more unreasonable than this is that people think it's actually Mike Tyson just sitting there and aping all these mints and changing his profile picture and tweeting like, how high is Solana gonna go? It's not him. It's not him. It's not actually fucking Mike Tyson doing these things. I'm pretty sure of that. Like, no. Irene Dow, this is... I don't want to touch this. I don't want to touch this. I just refuse. I'm not taking the bait. Okay, fuck it. We're going to touch it. I don't think it's that bad. I don't think it's that bad. If you think about how many NFTs are straight up rug pulls, scams, Fiverr art, sell out the mint and rotate to the rest, etc., fake promises of utility and all this other stuff, somebody just selling pictures of themselves, and I'm pretty sure she might make money from royalties, but the actual... I think she basically said what she makes is going to go towards some DAO or cause or not to enrich her. And if people want to buy that, I think it's, you know... People have bought far worse than pictures of a girl having clothed pictures of herself on Twitter. That's probably better than fucking most NFTs, right? And also the mint was free. The mint was free. So, you know, come on. I don't think it's the most outrageous thing in the world. How many did you get? Yeah, I've got 50 of them, obviously. It's not the way. I think it's overblown. People being upset and mad and calling everyone else simps. Like, I get the eye test version of it. But fundamentally, as far as like people buying NFTs and what she decided to do, it's genius marketing. People have only been talking about it for like the only thing people talking about for 2 days. It was a free mint, and my understanding is the money doesn't go toward directly enriching her or whatever. That's not that bad. Everyone's saying I fucking swept the floor. Oh, more beanie stuff. Allegedly beanie. No comment. Politics. No, thank you. RV tweeting about Ether rocks. Ledger buying more shitcoins. TA on the VIX. Yep, Irene stuff. Look how bad my feed is. Where's the alpha? Where is the alpha? Maybe this is the alpha. Ledger buying time, but... Oh, this is good. Obviously, you know, the driving narrative behind this is if the market dips much lower, I think Michael Saylor's entry is at somewhere in the low 30s. And so the implied meme there is that if it dips, if we get like another high time frame move, Saylor will be underwater. Which in itself is funny because, you know, he had like an amazing entry and TWAP the whole like bottom of the bull market, like 10k, and then having an average entry. You know, he increased his size on the way up, which kind of makes sense because it was so much easier to raise money, etc. But also just from a trading point of view, it's quite rough. But also people then jump from that to he'll be a forced seller if he goes underwater, etc. That's really not the case. But it's still funny to think about. Rug pulled, Chubbyverse. More Irene stuff. More references to Beanie. D's posting art. Macro stuff. Politics stuff. Replying to KSI. My newsfeed is dog shit, isn't it? It's really bad. It's really, really bad. I need to curate this thing. I've got like half the people I follow muted. I thought that would fix things, but good heavens. I believe in memes like some believe in Jesus. Yes, Bitlord. Yes, very much so. Alpha Leak, people posting music. How Vitalik got into crypto. He's going to be on Up Only. That should be a fucking banger episode. What else we got? Who cool? More dunking on Ohm. This is the thing, right? One or two things happen, like the Irene thing, and Ohm goes down, and that's the entire newsfeed. There's like no diversity over these things. I don't think Sailor can de-risk, really. Ledger bridging. This is the Pentoshi Solana tweet. England's hottest fan promises will smash the Scots ahead of Euros. I mean, if this is England's hottest fan, I worry. And I disagree. I know England isn't famed for its beautiful women, but surely, come on. Good bait. It's the best they got. Anatoly tweeting about Solana. Okay, traditional market stuff. Weird discussion on like what's the impact on like what kind of message does it send if we call projects with odd tokenomics Ponzi's? And if you call everything a Ponzi, what happens when you get an actual Ponzi, etc., etc.? I don't think it matters. I really like the nascent, organic way that crypto native terminology kind of grows and emerges. Like when people say something's a rug, it's not always just like a pure technical rug pull or just like liquidity being drained, etc. Just like when you get creative tokenomics, we call it a Ponzi because everyone immediately knows what it means. I think it's outsiders being upset at how we use words, and I don't think it's too relevant. I love this. I use this meme all the time. The risk I took was calculated, but man, I'm bad at maths. Yeah, this is elite. Here we go. What else we got? Price goes up, it's genius, new paradigm. Price goes down, told you it was a scam. Yeah, I mean, this is known. This is how trading works. The fundamentals get better as price goes up, and the fundamentals get worse as price goes down. That much is obvious. It's also because, like, the meme here is the serious point to this is, like, crypto is insanely reflexive. You know? Like, the more, as it goes up, the belief that that's going to happen forever becomes more extreme as price continues to go up, right? And as price goes down, the same is true that it's going to go down forever. That belief is where a lot of terrible trading comes from, right? So if you have, let's say you planned weeks in advance to sell this level or to take profit, when the market's down here, you're not going to be hearing much in terms of euphoria or crazy stuff or it's going to go up forever, etc., etc. But as it starts to creep up, the euphoria also increases. And the belief that it's going to continue like this forever also increases. And so what people do, what terrible traders do, is if they plan to sell here, because they react to sentiment, especially if they're in line with sentiment, they'll move their targets up on the way up because the euphoria takes over. And they'll do the opposite as well. Like they'll plan to buy a level and people aren't like super pessimistic up here, you know, it's like good sentiment. And as it starts to go down, they get more pessimistic. Oh my God, it's all over, I'm going to die, and so on. And what they'll do is they'll move their targets down as the markets move down, as a response to the negativity. And I'm sure that 9 times out of 10, if you follow your original plan, it's supposed to quote unquote price in the shift in sentiment anyway. Or at the very least, you're at least might have an actionable edge from trading levels you plan in advance versus just reacting boldly to like a carefully or not carefully selected newsfeed. So if you ever catch yourself doing that, like market is going up and you move your levels up, and market's going down, you move your levels down, that's kind of a bad idea. What else we got? That's funny. This is weird. We saw Crypto.com pause withdrawals to investigate a possible hack. I don't think we've seen more information come out on whether any funds were lost or the extent of it or basically what's going on. It appears that it also affected accounts which actually had 2FA. So I don't know what the implications of that are. That would kind of be shitty if it's something big. Let's hope it isn't. Yeah, I don't know. But the thing is, it also depends on the market environment. Like, you remember at 12K BTC or whatever? I think Binance got hacked, or, you know, all this kind of stuff, and the market shrugged it off because it was so bullish. So if it's like a real hack and the market looks like shit, you know, we'll see the price impact of that. But it just sucks when you have like household name centralized exchanges seeing these things, because at that point you just give an extra point to the not your keys, not your coins crew, which isn't the worst thing in the world. I just think it's easier on average to secure an exchange account than it is to have a you know, hosting your own wallet, self-custodying. What else we got? Yeah, more Ohm stuff. Djokovic. This thing is insane, right? He got like... I didn't follow the chain of events too closely, but like they let him in, then they say they won't, then cancel his visa, kick him back out after he plays one match or something. It's a bit mad. It's a bit mad. Australia is definitely curious in their policy choices, is the language I'll use. Yes. Not going to touch this topic with a fucking barge pole. I will not be baited. Nope. Nope, nope, nope. What else? I think we're running out of content. I mean, look how... This is a very questionable newsfeed, isn't it? Let's give it one final refresh and give it like 2-3 minutes to see if there's anything there. Trader XO with a Matic chart. That's a pretty logical chart. Hard to disagree there. You spike the high, you fall back within the range. If it reclaims the red level, then this deviation likely won't hold, it goes up. But for the time being, looks like a beautiful overthrow type of setup. The range low target is pretty fucking low, but I can understand it. I'd say there's like maybe a first trouble area just at trend support. And if that breaks and you get no bounce from there, then, I mean, yeah. You can probably eyeball like a range midpoint there as well as some sort of level. But fundamentally, yeah. You've got big level, failed breakout attempt, resistance, kind of just looks like BTC after 68k or whatever. So that's... There you go. Agreed. CT will soon turn into motivational quotes and risk management CT. Yes, but only after the move has already happened. That's the number one rule, right? I think I released my risk management video somewhere here before the drop, so that was cool. Not that it matters, it's not the point of the video. It's not a market signal. Can you imagine how absurd that would be? Where I want to post like a signal, but I want to be subtle about it, so I go through the effort of making like an entirely new video and hope that someone like understands what I'm subliminally trying to say about the market by making a TA video. That'd be fucking absurd. Oh, I see someone tried to monetize this face and say Gainsey changed his profile picture. This is what happens when you financialize everything. You just ruin the good memes. This is so unreasonable. Oh, yeah. SZ's non-market posts are definitely, you know, get the people engaged. Suzu tweeting about simp culture is, you know, really something. Fuck's sake. Just gonna scroll past that, to be honest. What is this? No, you can't do this. No, this is so unreasonable. Oh. Can you imagine filming this as well? Like what that would actually look like? That is mad, isn't it? I mean, it's humorous, but can we keep the online stuff online and yeah, okay. Well, my newsfeed is really shit. This has been very revelationary. Is that a word? Revelationary? Revolutionary. Hold on. Am I making up words again? Revolutionary. Yeah? I guess. I think it's a word. Is revolutionary a word in the English language? Revelatory. Fuck! I can't speak English. Well, there you go. Time to end the stream. I can't speak English. I'm just making up words. That's the perfect top signal, if ever I've heard one. Thanks for hanging out. Hope that was interesting, fun, at least the first part. God knows how bad my Twitter feed is. Practically unusable at this point. Go get the FTX app, buy some illiquid JPEGs and some altcoins for your family members, and then when they drop 50 to 80%, buy some more, and you'll be the superstar of Christmas, Thanksgiving, whatever. But seriously, FTX app helps us, so go help them. Best crypto mobile app on the market. Go watch CBS's live stream. It's live at the time of recording this. Go tell them Cred sent you. And that's all from me. Thanks for hanging out. Have an excellent week. Newsletter tomorrow, trletter.com. Don on Wednesday. New podcast episode on Thursday. And then whatever. Then it's my birthday weekend. Go me. That's all, guys. Thank you, and see you later.